Hey everyone, and thanks for jumping back into the cryptoverse. This is NFA Live. Every single Thursday, we are here. Rob from Digital Asset News up at the top. How are you doing?
Good, man. Good. Hi, guys.
Pretty good. And Guy from Coin Bureau. How's it going today?
Yeah, good. Good to see you guys.
Good to see you guys too. Well, it's been an interesting few weeks, to say the least. A lot has happened not only in the crypto space, but in sort of the macro side of things. Also in the stock market. It's been just a really interesting time in September, as it normally is. So let's just go ahead and kick it off. Look, we got some good news yesterday. Headline inflation came in at what, 2.5%. That's
Yeah.
great. I'm sure Powell is happy to see that. I'm sure it has helped secure a rate cut for next week. So I'm curious, given what we know now, what do you think the Fed's going to do here? You think they're going to go 25 basis points next week? You think they'll go 50 basis points? And the bigger question, do you think inflation will continue to fall? After this, or is this the bottom for CPI? So I'm curious what you guys think about that. Rob, why don't we start with you?
I love my macro. This is great
There you
stuff.
do.
So there's two parts to your question. Are we going to see some rate cuts? And then, are we going to actually, as we come through, do you think inflation will continue to fall? So obviously, I just showed up on my screen. We can all take a look at this for the CME group. We can see that because of yesterday and the CPI numbers coming in as pretty much expected, we're looking at 25 basis point cut. And before this, I think it was a 70-30 split. Some people were still saying that we're going to cut this by 50, but looks like the entire world now is looking at it and say, yes, it's going to be a 25 basis point cut. So the next question is, are we going to keep seeing this? Is it going to be the same thing? There's this great website that I steal from every single day. And I like this right here because it's got your macro recession dashboard. And there's also like the crypto part. But it's interesting because and we'll take a look at this, but like CPI and stuff like that. But interest rates are through the roof. It's probably because we inverted then uninverted, and every time that happens, almost every single time we've seen a recession. So we take a look at the CPI data. Is this going to keep going down? I like to look at this. Well, there's two. There's the core CPI. You take this out, energy and food. And if you go over, just so everybody is aware of this, that the numbers keep going up continuously. It's what they look at as far as like year over year. So right now we're at 3.2%, right? But just remember, because of the great money printing, America's great at some things. And one of those is quantitative easing. We do this all day long. So we're going to see this. It's going to keep going up, but yes, the CPI numbers are, of course, year over year going down. And we take a look at this, the regular, and that was core CPI. Take a look at all CPI. Again, it's still going up, but if we take a look at year over year, yes, it's looking pretty darn good as we come down to 2.59%. And that's where the Fed wants it to be. And they said, this is where we want to go. We're trying to keep things in line. So will it keep happening? I don't know. But this is, on your site, I like how you have it as CPI, Ben, and you can take a look at none month over month, year over year, or just inflation year over year, same thing. But if we want to really take a look at like some forward-looking data points, we have to take a look at the PPI. So PPI is everything this is the producer price index, and we can see that over time, especially after the cerveza sickness, coronavirus, whatever you want to call it, we can see that those numbers had gone up pretty darn high because of the fact that it takes so much funds, so much money to actually make things, and now it's kind of tapered off. So why is that good? If the PPI starts to go down, that means that the cost of goods and services will also go down. If the cost in goods and services can go down, then we as consumers don't have to pay so darn much. So if that keeps going down, and that's what I think the Fed is looking at, there's going to be some pretty positive outcomes as far as like them saying, yeah, inflation's doing pretty good. But on top of that, you also have to take a look at, well, who's getting paid what and how are we doing? So I take a look at the private payroll, non-farm, and you can see that. I know people will say, well, this economy sucks and it's awful. And I get that. But if you take a look just over time, you can see that the payroll levels, and this is just business and who's on the payroll, it's still going in an upward trajectory. Again, if you take a look at that year over year, it is down since 2022, but I mean, it's still going up as time has gone on. And then also, this is the big factor, I think. This is what Jerome is looking at. They don't want to see the labor markets cool. So the unemployment rates has done, actually, if you take a look before every recession, it usually takes a drop and then comes back up, takes a drop and comes back up, takes a drop and come back up. But everybody's excited about this part here, that we went from 4.3% unemployment rate to, what is this, 4.2? But remember, we did the same thing over here in February. We had an uptick and then it went down, and then it had 3 straight months of just going up. So for me to say that, are we going to keep having this inflation keep going down? It's anybody's guess, but these are some economic factors we can take a look at.
Like the comprehensive answer. Guy, what do you think about what the Fed's going to do? Rob was, he sort of covered the whole, a lot of the macro picture to give his view on things, and I think that's great. I mean, do you think the Fed's going to go 25 and sort of ease into the easing cycle, or do you think Powell's going to look at the unemployment rate and think like, oh no, maybe we need to go more at 50 basis points?
I mean, I think the Feds, they've been very cautious so far. And I think the fact that core inflation sort of didn't really budge, so what was it, 3.2 or something, I think that probably gives them the leeway to stick with 25. I think, as we've discussed before, I think there is like the possibility now. I think 25 is so sort of nailed on in most people's minds that there is the possibility that 50 could end up sort of spooking the market. Suggest the Fed is worried about something. So I think I don't think they've got anything really to lose by keeping it at 25. And in terms of will inflation sort of continue to fall? I mean, a 25 basis point rate cut, that still leaves rates at around 5%. So that suggests that unless we get some sort of shock, then inflation should, in theory, continue to decline. But I mean, it certainly now seems that the Fed is sort of, 2.5% inflation. They're pretty darn close to that 2% target. So yeah, it seems now that perhaps jobs data is something the Fed are concentrating more on. But it seems like they're getting closer and closer to landing the plane, so to speak.
Yeah, I mean, if you look at inflation, we're pretty close. I mean, 2.5% is not that far away, and I guess core inflation is still kind of high at 3.2, but it is nice to see that headline inflation has come down. And I believe, correct me if I'm wrong, but I believe headline inflation started dropping in 2022 sooner than core inflation. I think headline inflation peaked about maybe half a year earlier than core inflation. So it could be one of those things where core inflation, is just lagging behind by, a few months or something. So I guess the next thing to ask, and Guy, I'll start with you on this, and someone's already sort of asked it here, how interest rates affect Bitcoin dominance, but beyond just Bitcoin dominance, right? Like how do you think that rate cuts will affect the market, and can the Fed actually achieve a soft landing? It's not unheard of. They achieved a soft landing, in 1967. You could argue they achieved one in 1995. So it's not impossible for it to occur. So I guess that's the big question: is does it look like there's a chance that they are going to land this plane without a hard landing? And what do you think about the market? Like, do you know? And you can answer about Bitcoin dominance, whatever you want. What do you think it's going to do to the market?
I think, I mean, in terms of crypto, let's talk about it from that angle first. I mean, crypto is great at pricing these sorts of things in. So my guess is that 25 basis points is very much already priced in by the crypto market. Whether that's necessarily true of stocks, I'm not so sure. But I think the thing to bear in mind probably is the lag between rate cuts and their actual effect on the economy, and that lag is sort of, I think, generally agreed to be at least a year. So I wouldn't be surprised if in the short term, let's say they go ahead with the 25 basis point cut next week. I don't think that will necessarily change anything in the short term. It will increase, it will sort of contribute towards this steady rise in liquidity that we're seeing, but that liquidity is going to take time to hit the market. That liquidity, and of course, we've got to factor in sort of these further rate cuts that are on the horizon as well. I mean, I think as well as next week's, I think that there's supposed to be two more this year. Which are again two more of 25, I think, is being factored in. So I get the question is how long it will take for rate cuts and increased liquidity to be felt in the market, and to be felt by when we're talking in terms of crypto, and we're talking in terms of Bitcoin prices and altcoin prices. Like how long it will take before that improvement, if you like, is felt in people's pockets, and people feel like they have some extra money to spend on risk assets and what have you. So I think there will be a lag. Like I say, I think probably Bitcoin and the crypto market have already priced in the first rate cut. And I think what's going to be really, really interesting to see is what the Fed's forecasts when they announce the rate cut next week, what their forecasts for interest rates, inflation, unemployment, all the rest is. I think that'll be the SEP, the summary of economic projections. And I think that's supposed to. I think they announced that at the same time as they announced the cut. So that will be really interesting to see. I think that will give us a much better idea of what lies ahead. But yeah, I think it'll take time. And I mean, it's the smallest cut they can really do, isn't it? So perhaps it's more of a psychological effect than anything else at this stage.
Yeah, we actually also saw the ECB today cut by 25 basis points. But this is their second cut, I believe. So it's possible that markets are already starting to react to this stuff, because maybe obviously the crypto markets don't only care about the Fed; they also look at other central banks as well. But of course, the Fed makes up a big component of what the markets have cared about recently. But yeah, no, I mean, Rob, are you in a similar camp? I mean, are you where do you think rate cuts are going to take the market? I know previously you've talked about rate cuts could very well be a good thing, right? I mean, as long as there's no like growth scare and stuff, historically risk assets can go up after rate cuts. But if there's a growth scare, obviously things play out a little bit different. So, I'm curious what camp you're in. How do you think it could affect Bitcoin dominance? I know you've also been pretty bullish on Bitcoin dominance for a few years. So what are your thoughts?
So I like what
Don't get him started on Bitcoin dominance, Ben.
Yeah, we'll never get off that topic. That's for sure. I like what Guy talked about. He said, these are going to be pretty much rolled in. It looks like the crypto market is really good for pricing these types of things in. But I mean, think about it. So just to refresh my memory, go back to the 70s when you had Burns and then Volcker for the Fed Reserve. What did we take a look at back then? Did they cut too fast and then they had to reverse everything because inflation went up, or was it the opposite?
Yeah, so basically in the 1970s, they loosened policy too soon.
Right.
And then they just we got a second wave of inflation that was actually worse than the first wave.
Right.
And then in the 1980s, Volcker came in and he finally did what needed to be done to actually tame inflation. And he actually induced to basically a back-to-back recession, sort of like a 1980 recession and a 1981 recession. But again, I mean, the markets didn't. Here's the thing, Rob. I think a lot of people think about like recession as like a 50% drop, because that's what happened in the financial crisis. That's what happened in .com. But there's actually plenty of growth slowdowns, recessions where the market just drops like 20%. That's what happened in the 1980s. That's what happened in the 1990s. It's certainly possible, and that's the stuff that I think Powell it would be completely fine with. But yeah, no, it was basically Burns pivoted too soon,
first. Yeah,
and then Volcker did what needed to be done.
Yeah. So two things. So first of all, like, you know, when the traditional market drops 20%, that's a bad day. And for us, that's like 3 weeks ago. So, I mean, these types of things, when we talk about like risk on assets, got to understand that. I know people will say, well, it's a hedge against inflation and digital gold, but you know that if we start to hear the big R word, we're going to drop even more. But I think this is a smart decision. 25 basis points. It's like not too much. They can get in there and be just fine. So to answer your question, it really comes down to like, the question is there an immediate response to these cuts? And then can we achieve a soft versus a hard landing? I guess first we have to like define what would be a soft versus a hard landing. You had a video out like I think 4 or 5 days ago, Ben. It was really good, 30 minutes or so. And you took a look at like 200-day moving average, 100-day moving average, and all that stuff about where it would actually go and the macros and so on and so forth. I took a look at it as like this. If we're just going to look at like the economic factors to see if we're going to actually hit like a soft landing versus a hard landing. If we take a look at GDP, I mean, a soft landing would be like just a little bit of growth, and a hard landing would be, you know, negative quarters. If we take a look at the unemployment rate, a soft landing would be, I mean, like below, well, actually where we're at now, right? Whatever, 4.2%. And a hard landing would be, you know, going pre-pandemic levels like 5, 6, 7% and higher. Job openings and inflation, wage growth, all that stuff, right? So if we just take a look at, just real quick, because you were talking about, you know, back in the day, and I think this is important for people to remember, is that when we're talking about these rate cuts, like we look at these rates as like, you know, 5.25, 5.50, and it's like the worst thing of all time. I am old, and I remember, I mean, a long time ago, rate cuts, you're looking at an 84, 11.25%. I can't go backwards to when it was in the 70s, but I want to say it was like 16, 17%, something crazy like that. So we can come from here, we go all the way down. Look at this drop from 89 to almost 10% to 3%. And of course, even from there, just one thing is that when you start to cut rates, there's a time frame between when you pause, which is this little part here, to when you actually hit a recession, to when you actually recover. And this, we're taking a look at the funds rate. But if we overlay like the market always recovers first, and then the economy does. So even over here, I mean, if we're talking about like initial rate cuts and what it's going to do, right now it's going to be an exuberance. People are going to be happy. There's going to be a price appreciation. The traditional markets should rally, and then the crypto markets will also rally again. But as they cut rates, that means that there is the loans that you can pull out for, say, like auto or home or your credit cards, those will be reduced so people can actually take more loans and they can get more funds. Those funds come in, then they can actually buy more things, right? They can buy more things. And then, so what do the PPI or the consumers do, or the producers do? They raise prices. So it's like always like this balance. So in the long run, we'll probably see a little bit more if they keep cutting and cutting and cutting, and we don't have everything in the background. But just to talk about those factors of a hard landing versus soft landing, if you take a look at GDP, this is from the Bureau of Economic Analysis. And you can see that Q3, Q4, Q1, there was 2 quarters of a decline, but now we're on the uptick. So I know that people will always say, well, it's 2 quarters of decline, but I mean, there's different definitions and the government says it differently, but that's what the data says. And if we take a look at like, as far as like job openings, I mean, we took a look at the unemployment rate, but look at these job openings. I mean, we've gone quite low as time has gone on since the high of 2022. So we have that. The initial claims, I think did you just say that the initial claims has gone up just today?
I mean, it went up. You can see on there, right under it, it says it was just up by about 2,000 or so.
No.
Not very much.
Not very much. So it's not too bad. Then we take a look at JOLTS, number of unemployed persons per job opening. We're pretty much pre-pandemic levels, 0.9 before we hit the recession, and now today we're on 0.9. So this is for, per job opening, and unemployed persons almost like 1-to-1 type of thing. Average hourly earnings are up. We take a look at, what is this? Median household income. You can see that this is from the Fed, $80,000 here in the United States. But what does that tell you? In 2019, it was better. And in 2019, the cost of goods and services weren't near as high. as pre-pandemic levels. So you've got less of a actual income coming in, as opposed to like 2019 when things were cheaper. So to talk about like, where's it going to go? In the short term, it's going to be good. I think in the long term, if we keep cutting and cutting and printing, it's just going to be the same thing over and over again. That's pretty much how it always works.
Yeah, no, I mean, it'd be kind of interesting if we get a hard landing, but it doesn't happen until 2026 or something. Kind of like when we always have bear markets in crypto, the midterm years, your
Right.
2014, 2018, 2022, 2026. Perhaps that'll be the narrative.
Right. You're right. It should happen. We can't just keep avoiding these recessions and kicking the can down the road. And when I think it does happen, it's going to be big. I'm just hoping it's not 2025 when everything's supposed to come off, but we'll see.
I wouldn't be that surprised if there was like a scare, like a growth scare, because that's what actually happened in 2016 was, and a lot of people have actually compared this cycle to 2016. Like structurally, it looks very similar. And actually in 2016, there was a growth scare and people thought that we were going to have a recession. The S&P dropped like 20%, but then it just skyrocketed in 2017 and there was no recession. So I wouldn't be that surprised to see something like that happen, like kind of get a scare and then people are like, oh, maybe it's not as bad. And then it arrives in 2026 when it always does. But speaking of narratives, I'm curious, look, I actually am a firm believer that the narrative follows the price and not the other way around, right? I mean, if Bitcoin were at 100K right now, then I don't really think anyone would be paying any attention to the macro stuff at all. No one would absolutely no one would care about it. The only reason we're talking about it is because Bitcoin's been trending down for the last 6 months. So what else are we going to talk about, right? I mean, what else are we going to do? So, but I'm curious, there's been some pretty clear narratives, since Bitcoin bottomed out in late 2022. And the first narrative was, Bitcoin. I don't know if you guys remember, but back in early 2023, when the banks were failing, we were like, well, buy Bitcoin, because you don't have to worry about your money failing, like Silicon Valley Bank and all these other banks that basically were just collapsing. And Bitcoin got a nice boost from that. And then the narrative was the spot ETF is coming, so buy before all the all the retail buys the spot ETF. And then it was the halving, right? Now buy because the halving. And I almost wonder, it sort of feels like the market hasn't really found the next narrative to cling on to, since March. What really has been, I think they tried with the Ethereum ETF, but that really didn't go anywhere. So what is the next narrative for this? And I mean, again, I am a firm believer that narrative will follow price and not the other way around. But let's suppose for a minute that the markets do well in 2025. What is the narrative that people are latching onto? Guy, what do you think?
Well, I mean, I think the one that sort of springs most readily to mind, depending on who wins in November, of course, but it could be buy because there's a Bitcoiner in the White House. Buy because the president spoke at the last Bitcoin conference. If Trump wins, that could be a narrative, because that was really, unprecedented and unthinkable until just recently. So that could be enough. There's also the fact that I know I rabbit on about this a lot, but from next year, banks will be able to hold it. Banks will be able to hold Bitcoin. There's talk of a reserve asset, so the narrative could be buy to front run the banks. Buy before Michael Saylor hoovers all of it up, or some other publicly traded company. We are starting to, obviously MicroStrategy's been doing it for years now, but we are starting to see other companies, the Semler Scientific, Metaplanet in Japan, and others. Companies are starting to add Bitcoin as to their balance sheets. So yeah, I think either of those three or four perhaps could be realistic. But I do agree with you, Ben. I think the narrative follows the price rather than the other way around. But those would all be kind of, well, certainly if Trump was president, I think that would be the most realistic, perhaps.
Yeah, I mean, it seems like that's right. I mean, you're right. It seems like that's the obvious answer from like sort of a political standpoint, what's going on. And
Mm.
Rob has talked a lot about, and I'll let him answer, but he's talked a lot about, getting more regulatory clarity, which obviously could come next term. Um, so Rob, what do you think? I mean, what is let's assume if the market does trend higher, what's the narrative?
I've been here long enough since 2017 to figure out that there is no shortage of narratives, especially the information that is put out. I will say though, if you who are watching the video right now, if you want to get a balanced perspective of narratives, Guy and Nick do a great news show live now on Coin Bureau. And I was watching it, Guy. And what I liked about it was that you guys just didn't say like positive, 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 moon, 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 moon. It was positive, positive. This part's going to suck. And then this part, watch out for and protect yourself here. And I was like, that's how it should be done. So like when we hear about narratives, it's a funny thing. I'm going to go against Guy and take the opposite. Let's say Kamala Harris gets in. So now we have a person who, let's be honest, is not pro Bitcoin and not pro crypto and is not pro regulatory clarity. So the narrative then becomes, okay, get this now, get Bitcoin. And this is how it's going to work. Usually get Bitcoin and crypto now before the market collapses, because when she's in there and her administration's in there, they're going to crash the markets, and not just the crypto markets, but the traditional equities markets. So you have to get in now because it's a store of value and it's digital gold. So that'll be that part. And then of course it'll say, but don't worry about it because the narrative is it'll be flushed out of America and then we'll get it in the EU and Southeast Asia and Russia and China, India will adopt it. And that's okay because that's where it'll go. So I think there'll be a narrative for that and a narrative for that positively. And it'll just keep going round and round. So I don't know what the next narrative is, but I can tell you how people will spin it. And that's pretty much it. And this is why I'm always talking about dollar cost averaging, because I can't control that stuff. It's just impossible. But if I dollar cost average over the long haul and have at least a minimum 4-year time horizon, I'm safe. And that's all I care about.
No, that's the key, right?
Mm,
None of us
yeah.
know where the markets are going to go. I think DCA is the best strategy, and mostly for Bitcoin. I mean, for altcoins, they kind of come and go. But
Come on, Ben. You're a big altcoin.
I gotta get that in there, Rob. I mean, let's be real, right? Let's be real here. No one's preserving this valuation by DCAing meme coins over multiple cycles.
Pepe coin? Okay.
We'll see.
We'll see.
If you guys have questions, by the way, feel free to ask. But I have one more. We have another macro, but we've kind of already covered that. So we'll do a fun question just briefly. It's 2027. Investors are tired of being rugged with the latest and greatest meme coin scams, and they're tired of being lied to. And so in order to help investor confidence, some of the altcoin projects decide to have quarterly earnings calls.
It's funny.
Pick an altcoin and provide its earnings call. Rob, you want to go first?
So it's two things. So earnings call, like I think most of the crypto projects that are out there, and because there's over 1,000, right? There is no earnings call. There is just, hey, let's talk this. So we don't have earnings per se, but let's talk about what we could do. And let's talk about the community earnings and how we're growing the community, because we sure as heck aren't growing revenue. So actually the second thing is this will come down to my $12,500 Ethereum price prediction. This will get cut and it'll be put all over Twitter, I'm sure, but this is why I say that. So when I read this question, I was like, this is not even a real question, but it's pretty funny. So what I did was I said, all right, I'm just going to run this through ChatGPT, because why not? And this is exactly what first of all, this is what ChatGPT said. And this is, of course, the highest information. Yeah. Highest information you could possibly get. And just remember, AI isn't perfect. So it starts like this. Good morning and welcome to the Ethereum Q4 2025 earnings call. Here's the key financial highlights. Total ETH staked has surged to 180 million, representing over 75% of the total supply. And I was like, that doesn't sound right. So when I went over here to CoinGecko, the total supply is 120 million. So I don't know what happened, but people will say, well, it's just growing. But no, I mean, over the last year or so, actually, Ethereum has actually gone down as it gets burned and used. So I don't know, like, take this with a grain of salt because AI is not perfect. And it talks about how gas fees were optimized. The Ethereum protocol upgrade dubbed Hydra, which I don't think that was what it is. I think that's Cardano, but sure enough, okay. With total value locked across DeFi, hitting $750 billion. And if you take a look here, oops, that's not it. DeFi Llama. Did you know that for the total value locked for all of Ethereum, total volume, is this I think it is 100.4 billion total. Hold on. Let me put this in for Ethereum. 57 billion, excuse me. So it's roughly half. So there's that. Layer 2 explosion. I think this could actually be right. That layer 2's accounted for nearly 60% of Ethereum's transaction volume. And I was taking a look at this because I think the future, we talked about this before, the layer 1 blockchain that is Ethereum is just there for security. Anybody really use that and transact? No, because it's super expensive. But you take a look at like layer 2s. I didn't know this, but like these are the to send ETH and swap tokens. I got to tell you, this isn't like the greatest price breakdown as far as like being affordable. Like Starknet is 57 cents to swap tokens. Polygon is 275. To send ETH is very cheap, 7, 9 cents, 15 cents, 16 cents. But don't we have other layer 1s that can do this even cheaper right now? Oh, shoot, sorry. You couldn't see that part. Sorry, this is called L2 fees. I'm rambling and I didn't get to show you this. L2 fees. So as we're going through the Q&A, just take a look at this and tell me if this is right, because this is right from L2 fees. This is ridiculously high. I don't see how people in all over the world can actually take this. And then just to sum this up, key milestones, Ethereum's EIP, Ethereum's price reached a new all-time high. This is the prediction. Ethereum's price reached $12,500 this quarter. This is coming from ChatGPT, so you know it's legit and it's going to happen. But I will say it's not too far off from Ben's prediction here over on the risk levels. If you take a look at the risk levels for Ethereum, 1.00 is 11,728. I'm just saying, this is just from Ben's website. I don't know. So that would be my price prediction, and that's where I think as far as earnings call go. So that's it.
I saw a guy, I'll get to you in a minute. I saw some people saying that I guess Grayscale has announced a new crypto investment fund for XRP.
Awesome. So they can buy it and dump it. Great.
Gosh.
I mean, I just saw I knew something had to have happened because like XRP was up 7%, like immediately. So I was just curious what I mean, of course, still a lower high, but I was curious, like what was sort of the catalyst that then I was like, oh, it's the Grayscale stuff.
Way to rub it in, Ben. Lower high.
Hey, I mean, look, eventually maybe it'll change, but that's what it is so far. Hey, maybe on the other side of rate cuts, right? Maybe on the other side of rate cuts.
Hey, XRP Army, I'm with you. You guys need a win. You guys really did a great thing by dealing with Gary. Thank you.
Do you remember when you tweeted out?
For the team.
Do you remember when you tweeted out, Rob? When you tweeted out, like, I think it was like a year ago or something. You were like, the SEC or XRP wins the court case or something, and it can be listed on the exchanges again. And I was like, great, I can finally sell my XRP.
Yeah, as if everybody loves you already. Then Ben tweets that out. I'm like, this ought to go great.
You just couldn't help yourself, could you, Ben?
I could not. No, I could not. And I still contend that actually, when I said that, it actually did mark the top because it's been lower highs ever since. But I will say, I mean, look, we're near rate cuts, so I gotta stop. We're near rate cuts, we're near QE, so I gotta stop rubbing it in too much longer, because if I keep doing it for too much longer, then the altcoins will probably rip me a new one. So I do think it's important to pivot there. But Guy, what are your thoughts on the earnings call question?
Oh yeah. Well, I think it'd be an interesting thing to see. Actually, funnily enough, like I think some crypto projects, altcoin projects, are sort of leaning into that idea. A lot of them do sort of community calls and things like that. But I like the idea of them sort of being forced to do a sort of traditional earnings call, because obviously for the £500 gorilla in the corner of that room every time will be the fact that there are no earnings. So it'd be interesting to see how they did that. I like to think that crypto projects would sort of would take that idea of a regular earnings call, put a sort of crypto slant on it, and really run with it. So I think, for instance, like the first half an hour would just be dedicated to talking shit about all their competitors. So the first half hour of a Solana call is the thing is, like, most important thing is just remember that Sui and Aptos and all that lot. That's a lot of shit. They say they're fast. They're not. So that'll just it'll just be sort of half an hour of hate on the competition, and then it was sort of earnings. Earnings is just, it's a vanity metric. It's a vanity metric. Like, we're here, we're changing the paradigm here. When it's not about earnings. It's not about earnings, So I think, I'd like to see how they do. And then some will just, I hope kind of some lean into the sort of character of the coin itself. Like I like the idea of Monero's earnings call just being like white noise. And a guy, a sort of Guido Fawkes mask in the background, just sort of laughing at everyone, or like Bonk just bringing on a dog.
Yes.
They just sit a dog in front of the screen. It's like, but I like to think, they'd redefine it. Cardano's would be a sort of earnest discussion about how the latest upgrade, named after a 12th century Mongolian poet, has successfully gone ahead after being tested for 6 years or something. It's all systems go now for the next upgrade, which is named after a 14th century artist from Genoa or something. I think they'll redefine. I'm looking forward to seeing them, Ben.
Yeah, well, I've always thought like there should be more communication. And I know some of them do communicate, but you would think there at some point there probably needs to be, because look, as Rob was saying, like as there's more regulation, there's probably going to be more stuff like that to help keep investors informed, right? Because think about it. Like think about if you're a meme coin and you have to do like a quarterly call, like what do you say?
Funny.
What do you say?
We burned all the LP tokens. It's over. Just get out.
Yeah, sorry guys. And then they just click end, and then they just disappear. That's your earnings call.
It's been 3 months since we last rugged our community.
Yes, look at that. It's just earnings call. We'll just say earnings call, and then trust me, bro, and then just start. That'd be it.
Well, I'm glad to hear those. I always think it's fun to have a sort of silly question. We have some other questions that people have asked, and so we can get to maybe a couple of those. Here's kind of an interesting one. In your opinion, what is the most likely use case for crypto amongst the everyday person? So your mom, your neighbor, your best friend's dog. Someone said they got into crypto because DeFi made sense to them. But yeah, you guys have any opinions? Like what's sort of the everyday use for, just for your for anyone? Either of you guys can take it.
I think at the moment it's just transferring value, which sounds very boring, but the transferring money trustlessly, seamlessly, and cheaply between them. I just think this idea. I still am amazed that we live in a world where most people, someone who wants to send money from the United States to Pakistan has to pay 10% or whatever it is. Has to pay for that privilege. Like, that's crazy. Yet they can do it now. They can do it with USDT or USDC. It's not very sexy, but I think it's amazing. And I think it's long overdue. So that, I think, is it at the moment. And you expand that out, and that becomes sort of payments more generally. But I think it's amazing that exists.
Yeah, I think for like the most likely use case for crypto is rug pulls. And then after that, it's probably, just like what Guy said, payments. And like we have, so here's an example. Like we have family in Mexico, And when we want to like transfer things, like we can go to Western Union and pay through the nose for that. Or if we want to like send them, like we just recently used Tunkeeper wallet for Toncoin, and they use that, and then they could transfer into Tether because they're backed by, they can move things to Tether, and they can buy things with Tether now. So it was like, to me, it just makes sense, and it's just fast. It's instantaneous, it's fast, and it's cheap.
Yeah. Yeah. No, we have a few more questions here. And we talked about this a little bit earlier. What's more affected, or what's the crypto market more affected by? The balance sheet or global liquidity? So I guess what they're asking is, do you think crypto cares basically just about the Fed, or do they actually care about, what the Bank of China is doing, and the ECB and the Bank of Japan and Canada and Australia, right? What does the market care about? Or what would you say is more affected by? The Fed or everything else?
Yeah. Ben, on the workbench, can you overlay M2 money supply with S&P 500? And then also, can you do a balance sheet or no?
For the
on your workbench on your site.
The US money supply?
Yeah. Well, I guess that's global liquidity. So can you do global liquidity?
I don't think we have global liquidity yet. We might have it in a few months, but we don't have it right now.
No.
You can do it on TradingView. There's an approximation I have for it. Let me see if I can get it.
I'll just, while you're pulling it up, Guy, what do you think? I got no opinion on this one.
I mean, I think the market listens to the Fed. We kind of jump to the Fed's tune, but actually the liquidity is what affects it. Do you know what I mean? Like I think the Fed is our sort of is what we pay attention to, but the forces in the market, the forces that bring money into the market, that's a liquidity thing in my opinion.
If you put that into TradingView, it's an approximation of the global money supply. It's basically looking at the US, Japan, Europe, and China. So if you're curious and you want to play around with that gives you an approximation to the money supply.
Nice formulation, almost like someone's got an undergrad in mathematics. Crazy.
Yeah. I thought that was a question for a moment. I was like, I have no idea.
I was like, I don't want to dissect that one. Okay. Nice.
Wrong channel.
All right, let's see other questions. Someone said, please comment about Bitcoin's monthly RSI, but I don't really have it. I don't really know what it is or what to say about it. Do you guys have any opinion on it?
No, but I mean, there's been different things on X. Once, it's a good idea to take a look at the monthly strength index, because as time goes on, you can see how the fluctuations in the strength, and you can it's just one more indicator to take a look at. I'm not a big TA person to take a look at it. But I know, like, when people show me that, like, you can just track things, and I don't even know where the monthly RSI is right now. I would assume it'd be a little bit lower.
All right, I'll pull it up. All right, here it is. So this is Bitcoin's monthly RSI. So yeah, I think this is. I've talked a little bit about this. Like it to me, it still looks a lot kind of like what we saw in 2019, right? Where you sort of get an early top, and then the market calms down for far longer than people think the market's going to calm down for. I think the other way to look at it, and this is what I was looking at back in March, was if you look at the 2-week RSI, right? The 2-week RSI already hit that trend line, right? And that is something that was one of the reasons, right? It was one of the reasons why to assume that whether the cycle peak is in or not, there would likely be at least a sell-off. But I mean, look, even though we tagged it, it doesn't mean you can't tag it again. In fact, in 2013, the 2-week RSI tagged that trend line a couple times. The reality for me when it comes to things like RSI is that it's not really a great indicator, because, like, for instance, like, a lot of people will use RSI to say if it's overbought or oversold, but some things can stay overbought or oversold for years before the RSI actually turns around. I've had countless people tell me why I was wrong on Bitcoin dominance because of the RSI, right? You know, the RSI was putting in lower highs or something like that. So I think the RSI, I think, is more of a confluence thing. Like if you have a lot of other indicators, then you can maybe look at the RSI for confluence, but I wouldn't look at it to give you the only answer, just because it's not. I don't really think it's meant for that. But yeah, I mean, that's just
Yeah, sorry, everything together. There should be multiple indicators to get you to the right opinion.
yeah, no, exactly. Yeah, exactly. All models are wrong. Some are useful.
Yeah.
I mean, I think the RSI can be helpful. I mean, if you're looking at it and the 2-week RSI is at like 90 or something, then yeah, it's generally a good time to sell. But as 2013 showed you, it doesn't always mean that the top is in, right? So it's a tough one.
Yeah, it's almost like MVRV Z-score and Pro multiple, and putting those together and just saying, okay, I'm just gonna use this one indicator. If you use the one indicator, it didn't work out for you too well in last cycle. So you got to use multiple, I think.
Right. All right, let's see. Any more questions? We still have a few more minutes. Comment about green Halloween. Yeah, actually that's an interesting thing, because a lot of times September is red, right? We know that. But you know, and I've said this before, while it's normally red, it's not always red. Last year it was actually green, and actually in I think in 2016, wasn't it green in 2016? I think it was. Maybe it wasn't. Maybe it was ETH that was green in 2016 in September. Let me see.
Oh, in September last year, I think it was green.
Yeah, it was last year green. Okay, in 2016, Bitcoin was also green in September after a red July and August. So yeah, I mean, look, it's just it's blowing smoke, right? No one knows. No one knows. All right. Someone asked comments about the S&P 500. You guys have any thoughts about the S&P?
Are we hitting all-time highs? We should be close to it, aren't we?
Oh, 55, 48. So the all-time high is
Oof. Well, just
69.
It just opened up and it's not looking good today. I'll tell you that. I think we just dropped from an opening of like 55.58 to 55.50. So, but didn't we have positive numbers just this morning for?
No one cares about that, Rob.
It could be true.
Yeah, I mean, so here's the S&P. It basically it's so far its high was in July, and yeah, it's kind of back up to this level right here. So I don't really have a whole lot to say about it, other than if you look at monthly returns for the S&P, I think that's actually what we should look at just very briefly. In election years with an open field election, right, where the incumbent is not running, the S&P tends to be red in September and October because of the uncertainty going into the elections. And I mentioned this before. It's because, like, do you guys follow the prediction markets at all? Like, one day it'll have like Trump ahead, the next day it'll have Harris ahead, and it kind of keeps flip-flopping, like who's actually ahead in the race.
Yeah.
I think that uncertainty in the market or in the political side, I think that affects the markets, because the markets, I don't think necessarily either one has any, necessarily has to be bad. It's just a flip-flopping between who's going to actually win. I think that's what the markets don't like. If you look at 2016, you can see that September and October was red. That was also an open field election. So, and I actually, if you look at a lot of them, they're like that. Like if you look at 2008, September and October were red. If you look at 2000, September and October were red. So I think it's more one of those things, and I think I had a question that I was going to ask you guys, and I just chose not to because I felt like it was redundant. But basically the question was, what's getting priced in right now? Like, why has the S&P been trending down for the last couple of months? Is it because of recession scare, or is it just because of political uncertainty? You could argue, right? I mean, initial claims are still relatively low. You could argue that the downturn in the S&P over the last couple of months is more so due to political uncertainty than anything else, kind of like it was in 2016. But if you guys have any other thoughts, I'd like to hear them.
No, there's always a narrative to fit whatever's going on in the market. So
that is true. That is true.
Well, I think there's a sense as well. I mean, in terms of the S&P 500 and the companies propping it up, the Magnificent Seven entirely. This is something we looked into a few weeks ago. The AI was a sort of the AI hype was a big sort of boost for these companies, and obviously Nvidia's done best out of it. But I think pretty much all these top companies have sunk collectively billions, maybe even trillions of dollars into AI.
Yeah.
And I think there is now a sense that among investors and sort of markets more broadly, it's like, well, have we seen a return on this investment? Is there going to be a return on this investment? And I think that's a really interesting trend to watch, because we seem to have plateaued a little bit. We had this sort of Cambrian explosion, didn't we? We had ChatGPT come along and change the game, and then everyone else started rolling out their own versions of ChatGPT, and now we've sort of got them, and they're pretty good in general. But we haven't sort of seen anything else. So I think that's something I'm kind of watching closely, is what does the hype around AI, or what does AI is it going to deliver anything? Because I think if that hype runs out and those tech stocks suffer as a result, then that could really exert. Because I mean, they're propping up the S&P 500 and have been for a while.
Yeah, thank God for Nvidia, right?
Yeah, but mind you, Nvidia took a tumble last week or the week before, didn't it? Because on that earnings call.
Well, that and concerns about legislation going against it. And then, of course,
yeah.
I think I heard a friend of the show, Nancy Pelosi, sold her stock. I'm not for sure.
Nancy.
Someone that goes to a lot of AI conferences was saying that there is starting to be some competition. I don't know how true that is with some of the AI startups. There's starting to be I think it's pretty clear that AI will revolutionize a lot of things. I think just like the internet did. I think the bigger question is, how quickly do those companies turn a profit, right? If they can turn it immediately, then current valuations are justified. If potentially, right? If they can live up to that hype. But if the earnings, if the profits are still 5 years down the road, 10 years down the road, then current valuations are a little bit rich. And I think that's what happened with the .com stuff. Is that valuations just got a little bit rich too soon. It's not that the internet didn't revolutionize our world. It did.
But I think people expect it to happen so quickly, don't they? There was the sort of sense, I think, when ChatGPT came out, it was like, well, within sort of 2 or 3 years, we won't have to do any more work, will we? And then it didn't quite work out like that. And I wonder if there's still that expectation among a lot of, investors in general. It's like, well, okay, so we keep being told it's going to do these things, but when is it going to do these things? And then it comes down to that, to that sense of, well, we overestimate what can be done in a year, and we underestimate what can be done in a decade. And actually, 10 years from now, the world is going to look totally different because of AI, but it's going to feel like such a long road to get there. And I guess that could lead to people, losing patience. I mean, we're in crypto. We're one of the least patient industries in the world. So,
well, exactly. But it's you know what, Guy? It's the same thing with crypto and digital assets, right? We get way in 2017, it was up only. It's going to go to 1 million. John McAfee told me it's going to go to 1 million. Why wouldn't it go to 1 million? And everybody's going to pile in. Before you know it, we just get way ahead of ourselves. And we go down. So like people say, well, the 4-year cycles don't matter and they're invalid. I'm telling you, there's always going to be a blow off top. There's always going to be an overvaluation. We're always going to overestimate, and then we're going to go into these little cycles. I still think it's going to happen.
Well, I mean, even look at what happened in March, right? Everyone was predicting Bitcoin to go to 100K.
That's true.
Like around the halving, because it was already at 73, and then here we are half a year later, and it still hasn't broken 73K again. I feel like a lot of time, I think what Guy said is right. We overestimate what happens in the short term, but underestimate what happens over the long term.
Yeah, exactly true.
Right. Yeah. I don't know if either of you guys want to. We're getting some questions about other asset classes. Any thoughts on bonds? The only thing, and I'll let you guys answer this too, but the only thing I'm curious about is what happens after the first rate cut, right? If you look at things like TLT, it's actually done pretty well for a while. It's been slowly going up. The long end of the yield curve has been going down, arguably because the market's starting to worry more about the labor market and less about inflation. But there have been some other countries, I believe, that when they cut rates, the long end of the yield curve for them actually went up. And I think the reason could be, I think a lot of people think, well, if the Fed cuts, the long end of the yield curve will go down, right? But if the Fed cuts prematurely and
Right.
inflation starts to get priced back in, then the long end of the yield curve could go back up, because then it might start to price in higher and higher rates later on because the Fed pivoted too soon. So I don't know. Do you guys have a strong? I mean, I don't know if you guys are even interested in bonds at all, but yeah, like, I mean, what do you guys think? I mean, if are you you think that bonds will do well? You think what do you think about the long end of the yield curve? Like the 10-year yield right now is where's the 10-year yield? Like 3 point
I think it's right in line with the 2.
yeah, so yeah, you're right. You're right. So oh yeah, they uninverted, by the way. The 10-year and the
Right.
2-year uninverted. But they're about the same. They're about 3.6%. So I'm just curious. Like I wonder if, let's say it this way. I wouldn't be surprised if the 10-year yield got at least a little bit of a bounce after rate cuts, assuming there's no immediate recession, right? Because if there's no immediate recession and the Fed's cutting rates, then you could start to see people price back in higher inflation.
I think maybe like with a 50 basis points cut, but Guy said it. He said it right. 25 basis point. It's conservative. It's not going to do too much damage in the long term. I would be more concerned if it was 50, and they come out and say, yeah, that's what we're going to go with. But 25 seems like a safe bet, like Guy said. So I don't see it. I don't see it affecting too much. It just depends on how many cuts moving forward.
Right. That's another question. Let's assume this is 25 basis points. What are they going to do in November? That might be the bigger question. Like, what is it going to be in November? Do they do 25 again, or do they start going with higher rate cuts by that point?
I don't know. That's for Coin Bureau to figure out, and that's why I'll just watch their videos.
That sounds like a good plan to me. Hey, Guy, can you guys figure that out and let us know?
We will. Yeah. I'll get our brightest minds on it. We'll phone the Fed.
Phone the
Have
Fed.
a word with them.
Nice.
We got a question for Guy and Rob. What percentage of your portfolio do you plan to allocate to Bitcoin in 2025? Let's say of your crypto portfolio, not of everything, but just of your crypto portfolio. What percentage would you allocate towards Bitcoin?
Well, in terms of, I guess it's in terms of where we are in 2025. Like if the bull market sort of plays out as we've been kind of expecting, and we see that peak Q1 or Q2 2025, then I would think by Q3, my plan would be to sell most of my altcoins, and rotate a good portion of that into BTC, some into stables as well. So I'm about 40 odd percent BTC at the moment in my crypto portfolio. So I can see that climbing to 60, 70%, possibly more if I then convert those stables into Bitcoin for the long term.
Same thing. So for me, like right now, Bitcoin is 70% plus of my portfolio. And then when 2025 comes around, I'll be selling 80% of all of my crypto. And that might be up to 100% for alts, because I just think that's usually where we go. And then I'm also going to sell my Bitcoin, and then I'll rebalance. I know people say, well, why would you sell your Bitcoin at all? Why don't you just hold on to it? It's because, first of all, every single cycle, it's been the same thing. And I've heard the same thing. Super cycle, it's going to go up forever. It doesn't. You can diamond hands, do what you want to. It's up to you. But I just think that's where it's going to go. And then people say, well, why would you sell in, like, again, the Bitcoin? Look, if I sell 80% of my Bitcoin, I'm still way ahead of, I think we're all here, way ahead of the common majority. And I have way more than I probably might need if it goes to that, whatever Michael Saylor said, $13 million in 20 years. So I'll be okay.
If Bitcoin's at $13 million in 20 years, there's something really going wrong, I think, in the economy. I mean, look,
yeah,
everyone wants it to happen, but if everyone's a millionaire, no one is, right?
that's true. Zimbabwe, right back at it.
You know that old story, the monkey's paw. You know that one where he
Yeah.
someone finds like a stuffed monkey's paw, and it turns
Yeah.
out it wishes, and when when he gets a wish, a finger goes down. But I think the catch is their wish comes true, but there's a horrible sort of in a way that you don't imagine. So I think that's kind of what we got with Bitcoin. Yes, we'll get a $13 million BTC. But that means the dollar turns out to be absolutely worthless.
Yeah, exactly. You go to McDonald's and a Happy Meal is, $100. You're like, wow, this is awful.
All right, guys, it's been an hour. We'll wrap it up.
Gosh,
next week. We're on Rob's channel, and so we'll see you guys over there next Thursday. Thank you guys for tuning in. If you're not subscribed to Rob or Guy, links in the description below. Make sure you guys go subscribe to their channels, and we will see you guys next time. Bye.
Thank you, guys. Adios.
Thanks, everyone. Thanks for watching.